Fantastic to see you here. Thank you very much. I hope your Wednesday has been wonderful, and I am so pleased to see you here. Whether you're watching us live on GoToWebinar, streaming on YouTube, or whether you're catching up later on a YouTube recording, you're so very welcome. Thank you very much for popping in. Particularly as this is not a particularly sexy topic. Quite often, of course, I'm asked to talk about how do I set up this trade? How do I set up that trade? How do I exit this trade? How do I exit that trade? So to start to talk about not trading is probably quite unusual, but those of you who have been in the market some time may recognize the importance. If you don't, or if you're just curious in terms of what on earth is he going to share with us tonight, then I hope not to disappoint. As always, I would be delighted to hear from you with any questions, comments, thoughts, or anything you want to type in the questions box. Really, you're very welcome. It's really nice to have any sort of interaction, and it's always a pleasure and a privilege to serve. Why is my presentation not moving? Is the question on everybody's lips. Let's just try and do that. Let's try and do that. Okay, give me a second. We've got a bit of a blip going on. Let's resume slideshow, see if it likes. Oh, okay, it's doing it now. Right, okay, so there we go. I've got to put up this important message. It really is an important message. Please take it on board. It is for educational purposes, particularly as we're going to be looking at live markets at the back of the session. See if there's any charts that are setting up. Talk a little bit about what's moving the markets, etc. We are on Wednesday, of course, and it's a big day in financial markets because we have got the FOMC meetings culminating in an interest rate decision, which we all expect to be 0.25%. But it's what happens next, which is the major debate, and we'll talk about that to some degree. But what you need to do, of course, throughout is do your own due diligence on anything you see here. Make sure you follow trading plans and, of course, manage risk on every trading action, consistent with your personal objectives relating to your trading and your financial situation. Right, that important message has been shared. Let's get into it. As I said, later on, we're gonna have a look at markets. It is all about the Fed today. Rate cut, yes, but what's next? We'll talk a little bit about other central banks. We'll talk a little about a Santa Claus rally under threat, which I might do a session on next week, actually, since it's getting towards that time. We're going to look a little bit more closely at gold and crypto. Gold's fluttering and crypto looks as though it's bouncing and may bounce higher. And of course, we're going to unpick our charts to watch. So hang around to the end of the session to get the heads up on all of that wonderful stuff. And of course, throughout, ask your questions. Say hi. Well done, Brian. I'm glad it's been in my teeth as well. I came up with one webinar, I share on to another. So for those of you who've done both, hey, power to you. It's always highest respect that you can listen to me for 2 hours. Anyway, yeah, look, AI in business is a new thing for me. I hope it sort of resonated with those of you who are on both sessions. It seems to have really caused a couple of wow moments. Hi to Neil, hi to Hugh, hi to Roger. Thank you very much for all saying hello. It makes me feel very, very unlonely. It makes me feel as though good company is always appreciated. Right. So let's get into this concept of doing nothing. Arguably, and I was a devil for this, right? I was of the ilk that if I had money and it wasn't being used, then there was something wrong. Every dollar had to be working hard for me every minute of every day in the market. That cost me a lot of market donations with that particular attitude and approach. But it took a long time for that one to sink in between these years of mine. And that knowing when to stay out of the market is possibly one of the most underrated trading skills. So I was thinking about this during the week, and I thought, during last week, and I thought, well, it's all very well saying, well, look, don't trade all of the time. Your money's sometimes working better, harder for you, sitting on the sidelines waiting for the right opportunity is the old cliche that I've used many times. But I thought we can get a little more rigorous than that. We can get a little more systematic than that. And of course, we're in the business of developing trading systems. We talked last week about consistency, and before that on probability. And so this essentially finishes off this triad of of more finer system development points. And so I thought, well, what filters could you consider? So some of this is probably things you're already considering. Others, and there's a couple of new terms I've come up with, as always often the case. Others may be completely new to you, but worth considering. The end point of this would be that I would like you to consider having a system that allows you not to trade, gives you the permission not to trade, if you like, for want of a better phrase, and that's articulated in your trading plan, as is everything else that's important. So not trading is a decision. It's not a delay. It's not, I'm not trading right now. I'm going to wait and see what happens to the next candle. It's a decision not to trade. It's a recognition that perhaps conditions aren't best, for whatever reason that may be, to be inactive rather than active. Because what we're after, of course, as we've talked many, many times before, and more recently, fairly specifically on high probability trading. So what is a high probability entry? What is a high probability exit? Well, those topics are things we've covered recently and extensively and are really important. So what we're wanting to do is, we've talked a lot about, well, you can do this, and we want this tick, tick, tick box thing going on, this checklist. But maybe we also need to have a checklist of things that would stop us doing it as well. And that really is about, we know that overtrading can limit potential. Even a strong strategy can fail if applied in poor environments, is something that we know all too well. I'll give you a couple of examples of that as we go through today. And of course, those of you part of the EA will know that one of the key differences that we put in the last few months is a market regime indicator, which is then tested for to see if the strategy works well in market regime A, B, C, D, E, or F. And we'll only trade in those regimes that it works well in. The discipline involved with this preserves opportunity because, of course, protecting capital now and having the cash sitting on the side, and those of you attending next bar with me and Cameron, this is one of Cameron's favorite mantras, is that having yourself in a position where you can take action when the opportunity arises is probably quite an important concept to bear in mind. Of course, this ties in with this. If you've got all your capital tied up in positions, and you haven't got capital that safely allows you to enter another position that perhaps is setting up significantly better, then that's potential and opportunity missed. I hope that makes sense. So what I've done is I thought, right, okay, I need to split these filters up into three, into sort of some sort of framework. So I came up with this three core filters idea. Market filters, which we've talked about, or we've already referenced, but we've talked about again. Environmental volatility-based conditions. Strategy filters, we talked a little bit about last week when we talked about consistency, but this is a pull it all together session where situations where your setup reliability may decrease, and of course personal filters, which will be the emotional mental states that may impact on your ideal judgment at any time during the trading day. So these are the things I'm going to try and systemize it all to make sure that you walk away with something that you can put into practice. And yes, I know you were late, John, but yeah, we're going to have a look at the markets at the end of the session. Let's have a look at market filters. So this is really sort of looking at the market as a whole. You might have the breakout setup or the double bottom, but it might be in a flat or low volatility session. Small candles, overlapping bars, low ATR value suggest limited movement, not just now, but potentially going forward. I mean, let's see if we can find an example of that. Scanners are in full force. This is the new MACD model. It's wonderful, absolutely wonderful. By the way, the EA that I've been testing this on, I need to find a chart which hasn't got a thing on it. So if we look at low volatility times here and here and here, what do you see about market conditions during these times? It's the movements that come after that tend to be obviously price plus is what we're always looking at. It's the movements after this with low volatility, perhaps when volatility starts to rise again, as it did here with this move, as it did here with this move. as it did here with this short-term move, as it did here. So you see a pattern developing. So it's not low volatility isn't a particular level. It's relative, if that makes sense. Because low volatility, an ATR of 16.5 may be okay for the may be completely appropriate for the GB pound yen. But if we put it on here, let's try putting it on the right chart, shall we? We can see here this is 2/3 of that on the Aussie Kiwi. So that's why I'm saying it's relative. It's not a defined number. It's relative to what else is going on. Context is always important, as we've talked about many, many times. Obviously, we need to be aware pre-news uncertainties sit out before high-impact events like CPI, non-farm payroll, central bank. If we ever get a non-farm payroll again, believe it is due to be released next week. It'll be an interesting number. And also watch sessional contexts. You often get a choppiness in the Asian session before the London vote or before the London Open, an end of session drift, particularly sort of at the back end of the London session, moving into the US session starting before the data starts to come out. Those essentially are environmental factors, are market filters that may say, hey, don't trade now, go away for a couple of hours, come back when it's auction time, and let's have a look again. Just because you've got to go to sleep, there's ways of managing that. You have an entry only EA, or you choose not to enter at all, and you have a look at the start of the next day. So all of these are key market filters. What we need to do is we need to try and quantify these. If we can quantify something objectively, we can then assign an action to it. It is a challenge, but there are ways of achieving this, and some of the challenges are relatively easy, and probably topic for another day. But things like strength of signal indicators, which I put something together for those of you part of the AI stuff. So it might be that if your strength of signal is, which takes into account volatility, often related to session timings, then that might be an additional, not a tick to get in, but rather a tick to keep you out if it's at a certain level. When we're talking about strategy filters, we're talking about when your setup really isn't the right setup for that market structure. So but when we're talking market structure, we're talking the market type. So if we're in a range-bound market, as you often would see in Asia, then a breakout system is more likely to fail, or more likely to get a fake out where it pops its head above for a few minutes and then comes back down again. And vice versa, of course. You may be trading range-bound systems when there is a range-bound market. There are a couple that might work in that state, but they wouldn't be suitable for a market which has increasing volatility. So one of the things that you need to be potentially doing from a practical point of view, many of you journal, and that's a great thing, but maybe making a note of market conditions of not only the strategy that you've used to enter. So let's say you did a Bollinger Band reversal or a breakout or a trend continuation, whatever it may be. Also alongside that, make note about what market type it is. And then ultimately, when you've got a critical mass of trades, you can subsequently go back and review that. So we all know about confluence, and when we talk about confluence, we're talking about, well, what things to give extra ticks to. So the obvious example that we've referenced many times over the course of the last few months, etc., years now, in fact, we're doing it in a circle, over 5 years now. Then I think so. An obvious example would be that is if we're trading a trend strategy, is the trend is it consistent with the long-term time frame as well, or are we trading against that? So we're looking at what are you missing that would support that trade further. There's a new term I've invented called anti-confluence, and this is things that would say, so rather than criteria for adding to the weight of evidence to get into a trade, it's it's weight of evidence to stay the heck out. So a great example would be, let's see if we can find one on a chart. A great example would be potentially, you might look at this and you might think, whoa, look at gold on the daily chart. That looks great. It's reached 4,200. But if you ignore the fact that within reasonable proximity, i.e. $34 away, there's the next key level, then that's an anti-confluence factor. So proximity filter that says it might be a breakout, it might be a trend continuation, but the next potential pause point is only, that's about 2/3 of an ATR away on the daily chart. And see what happened. It's stuck there, it's stuck there, it's stuck there, it's stuck there. So this position would now not only be in loss, but you have done nothing with your money. Your money would be static for the last 2, 4, 6, 8, 9 trading days. So not just this week, but the week before and the week before that. Your money would be doing nothing. You'd be watching it going, is it going to move? And it would actually be in a loss situation right now. So this concept of anti-confluence factors, I might even expand. I might do an article on anti-confluence factors. But what this is to say, hey, look, this is a reason not to get into this trade. So I hope that makes sense. It's a little bit of a different way of looking at things. It might be that you don't see it straight away, but consider an X strike rule. So for example, if you've got 3 times, or if you've got a 60% time that your position they've taken has just not taken off and it's decided to come all the way back down again, have a strike rule. Stop trading that strategy. Trade probability might be what you thought it might be, or there may simply be an anti-confluence factor in the way. So look at your charts. First question: rather than what you're missing that would support an entry, have you anything in place that should be blocking an entry? That makes sense. And so defining clear invalid conditions in your strategy plan for each setup is worth consideration. So if we want something practical, and so I will not if criteria rather than I will if criteria, if that makes sense. It's a little bit of a different way of looking at things, but I think it could be quite powerful and certainly something that's been borne out by some of the EA filters we put in place. Then, of course, we've got to come to you. We can't have trading without you. We've extensively discussed this before. Make absolutely no apologies for discussing it again because it's often the root cause of underperformance. You can have the best strategy in the world. You can have market conditions which favour it, but perhaps you're not in the place where you should be trading. Last week I talked or mentioned briefly the concept of emotional thresholds. So think of things that may impact your decision making. So fatigue, series of losses, boredom, not feeling well, not having been time pressured. All of these can affect execution decisions and execution quality. So asking a question at the start of the trading day, am I in the right state to be trading, should always be part of your daily trading agenda. And the other thing is, of course, it's not just at the beginning of the day that you might be in this place. Recognize it often and does change through the course of a day. Maybe that you're bouncing early in the morning, but by the time it gets to the afternoon, you've done some other stuff and you come back and check the market, you maybe just chatted or you've had a couple of things knock you off kilter a little bit. So again, we need to mitigate for that. So it's not only at the start of the day, am I in the right state to be trading today? It's later in the day, am I still in the right state to be trading today? You can have some guardrails. We've talked about guardrails before, so things like maximum daily trades or maximum losses and maximum wins equally is important, so you don't think you're invincible and can keep on going. The idea of having pause. I know Nigel Hawke, some of you have heard him talk before, is an amazing bloke. He says 2 losses and that's it, I'm off today. Because I know it's going to start to affect. I know that what that creates in me emotionally is going to start to impact potentially on my decision. So I'm going to go away. I'm going to enjoy my glass of Baileys and away I go again. Having pause and reset checkpoints after big trading events are always worthwhile. So if you've had a big market move for whatever reason, got some economic data coming out, move market significantly, you've managed that well, just walk away. Walk away. Routine pattern interrupts will call where you step away, recalibrate, and return all the program into your trading activity. So have this set of criteria that says, if this, or this happens, I'm leaving the market alone for the day, for an hour, for the next 15 minutes, whatever it may be for you. But having those written down means it's more likely to happen, and you're not likely to get caught up in, to be trading out, to be trading out, to be trading out. I need to make money. I need to make more money. Does that all make sense? Delighted to see some of this is resonating with you guys. Fantastic. I'm just going to have a quick check in YouTube world. Well, hello. I'm watching YouTube live today, but that's okay. If you are watching this on catch up, thank you very much. And if you are doing YouTube, if you like what you hear, don't forget to click a like and subscribe so you'll never miss a live show because you get notified half an hour before. Right. Okay. So those are our three types of filter. So we need to test these as though there were rules. Problem with this is that we only normally, I didn't articulate that very well, I haven't read it now. Normally what we do is we record and report on and store and evaluate trades we've actually taken. What I'm suggesting is you do the reverse. So you essentially start to journal non-trades. What that does is two things. First of all, it suggests that, well, am I losing out? Have I got a little bit of opportunity risk because I'm not entering things which are perfectly fine, and I'm just talking myself out of trades which I shouldn't. Alternatively, you do make some changes into the way you trade. So putting in some of those anti-confluence factors, it gives some evidence to say, well, this is actually a good thing. And then obviously, once you've got your filtered results versus your unfiltered results, you can calculate the impact of those decisions using a sort of what would happen if scenario. So if I'd done that, and if I'd not done that, and if I'd taken all these things on board, would have that impacted on my outcome? Consider an easy scale of 3 scenarios. So if I'd done this, this, or this, which would have produced a better outcome? And you might find something like, for example, in scenario 1, 20% of my trades out. Oh, that should have been 20% of my losing trades, reduced trades by 50% without reducing my overall profit. So I did that again. I didn't put that right. Apologies for that. And so what it's about is creating evidence, and the merit of evidence is not only does it guide you in terms of system refinement, but also breeds confidence in what you're actually doing and any change you've got to make. And of course, that confidence is at the basis of disciplined trading. I'm going to pause screening. I'm sorry. FOMO is my worst enemy. Yeah. The more I concentrate, the worse it gets. Walk away is a great strategy for me. Yeah, I hear you, Brian. That I had to battle that as well. Yeah, completely get it. And that's the first step to dealing with this and removing yourself from the market is owning it. Is being aware that that's happening, owning it, and then doing something about it. The owning it is the hard bit, though. So, having said all that, what we want to do is we want to design your own no trade framework. You can put it into your system. So, first of all, is identify good positions. So, what does a clean market look like for you? So, those confluence factors I talked about before. And then identify potentially low probability conditions, which patterns, volatility level, emotional states, posture regarding trading outcomes, so reduce profit or increase loss. And can these be outweighed by anti-confluence factors? And you obviously need to specify what they are. And then you convert to filters that are actionable, clear, unambiguous statements. So if X is true or false, then no trade. Test and refine, add one filter at a time, measure the impact on results. And then your trade routine. So this is your framework, if you like, for technical action. Your trade routines, your pre-market checklist, confirm where volatility is, session trends, news, trading state. Recheck filters after each setup or each major event. Remember those pause points are really important. Taking yourself away is a good thing. And then, of course, do it over the weekend again, and buy a glass of wine. Go and look at what your stuff is doing. And then you can either pat yourself on the head for a job well done, or you can say, right, that's something I need to work on even more than I am already. So what we've done today is we've sort of talked about the importance of being able to give yourself the permission not to trade, the reasons why, or the types of filters you may consider to put in, and then we've looked at turning these into a live practical ABC of action. So that, although it's appealed to every trader in terms of it might be useful, it might be little things you picked up if you've been in the market previously. Sorry, for a long time. If you've only been in for a short time, much of that will be new either way. Your role is really to just sort of take the next step, whatever that may be for you. So then, now let's, as promised, and is always the case. If you have any questions or comments or any of that sort of stuff, just put them in. Oh, it does, obviously with this, there is a case for automation of hybrid approaches. Another story for another day. So we're not coming later, we're coming now. So markets now, let's talk about it. So let's talk about the Fed is meeting tonight, what the expectation is. You possibly saw the video on this. Let's just have a look at the CME. So here we are. We are planned for a 87.6% chance of a rate cut. However, the news or the focus is going to be on what could happen in January. In January, there's only a 20% and 20% chance of yet another pause. Any change in that, if that remains the status quo, I don't think the market's going to be happy. I think we'll get a slow sell-off potentially. There is the hope there that it may get slightly better. Let's just check out where some markets are right now. So if we look at Europe, there we go, looking a bit flat. The market's felt all day as though it's been in a pause mode waiting for that decision. So we can see the DAX is down 0.6. Toronto about the same. FTSE is holding on. Okay, Trump's at the European leaders big time at the moment. Here's last night's action. So again, you can see it looks like a market in waiting. If we look at the futures, again, market in waiting stuff, a little bit of weakness on the Dow. If we look across commodities, gold futures are down, copper's up, copper's doing really well. We'll have a look at the copper chart. Oil looking good, and the FX world, it's really been quite a flat day overall, a little bit of weakness in the USD. Let's have a look at some charts, hey. So since we've got a gold chart open, let's look at gold. I did talk about a gold flutter. That's what I mean by a flutter. You can see they're really tight, tight range of around about $34 on a daily chart, which is quite staggering. If we look on, let's say, the hourly chart, you can see the amount of action within these areas. If you're thinking of trading this, you probably wouldn't. It's the first thing right now, unless you're going to scalp it. So it has broken 4,200, which is a key psychological level. You can see how many times that's been tested. Could be a breakthrough, could be a move down around about $20. That's not exciting me at all. After the Fed decision, we'll actually see some significant movement. So get into a trade now. It may be prudent to do short-term trading unless you plan to stay up all night. Well, one of the reasons for that is that the US dollar's just started to pick up again after a couple of weeks looking pretty miserable, when it was getting more and more plugged in that the Fed were likely to cut rates tonight. This created this down move, and then but the last few days it looks as though we've got some buying coming back into USD based on the fact that, the chances of a January cut are significantly reduced. Looking at the Nasdaq, look, all the major indices are not that far away from record highs. With the Nasdaq there, you can see we've just done nothing over the last 6 trading days. We're about 1.6% away from record highs on that. And if we look at the US 500, which is a little closer, it actually sort of pulled back a little bit. But we're still pretty close. Yeah, so within 1%. So that will shift tonight. If we get a fairly dovish Fed, we'll see that sort of move through there and new record highs. If we get a Fed which says we're not keen on doing anything, we could see quite a significant drop, maybe down as far as 700-800 in the first instance, possibly even mid 6-700s. Line the sun there to keep it down at 6757. Copper I've been raving about. Every time I say, oh, look at this next line, this is the next line of support, over the last sort of month or so, it seems to have hit it. Then had a pullback, hit it, had a pullback, hit it, had a pullback. Are we going to hit through this? Are we going to breach it, get another continuation? Keep an eye on 550. We've reached 550, 564 looks on the cards, and potentially retest of all-time highs. Copper looking very strong today. None of these I will be trading short-term, actually, and I think this has the potential just to go into noise. Looks a bit like a head and shoulders, reverse head and shoulders pattern. Not jumping up and down about that at all. Oils look generally sort of weak over the last months, really. You can see there since the middle of October, it's been this very slow burn of a sort of downwards trend channel. Looks as though it's going to breach to the upside. Last couple of days have been horrible. This is 4-year lows at 56.68. Watch for a breach of 57.70 to take us back down to that level. And then I think if it breaches this level, I think all hell may break loose. We'll see sellers jumping in. Let's have a look at some FX crosses, some strength in the USD today against the yen. I'm really liking 157 as a target area. You can see that line's at 156.93. It is range bound at the moment, so you've got to be patient. Should we get a breach? Again, as is often the case with the range, if we get a breach, then we'll get that attracting some buyers coming in. I think where it's going to be at the Aussie yen. That's also looking that yen weakness across the board. The Aussie looks really nice. The potential range it's trying to break out of. I would probably put it up to this level here, around about 104.37. In context, this is the highest it's been for it was up higher then. That's July last year, is it? Yeah, July last year. So we're looking on the daily chart. This is really interesting. So the weekly chart, you can see that key level there at 104.25. If we look at the daily chart. Yeah, not surprisingly, it's going to show exactly the same. It's going to show this level here with breach of that, really straight up, straight down stuff going on there. Back in June 2024, this drop was BOJ, interest rate highs. I remember it well. Anyway, if we look at the hourly chart, then of course we've got that line there. So multi-time frame agreement on Aussie yen. That's going to be my FX chart today. Because of that reality, that multi-time frame confluence is usually quite a strong one, but it has always being patient for a breach is what it's all about. Just a couple of other things along the way. GB pound Aussie. There's general strength in the Aussie because it's expected the RBA is not going to do anything, be quite hawkish tomorrow when it does its rate decision. But that breach of 2 is what it's all about. 2. So just keep an eye on that. Again, if we look on a weekly chart, you can see context of this. Breaches 2 could be down to 195.60 or so. But I just like the Aussie yen more. So there's nothing in the major asset classes I'll be jumping up and down about, though. We didn't have a look at Bitcoin, actually, did we? Let's have a look at Bitcoin. to see. So here's Bitcoin, which doesn't know whether it's Arthur or Martha. It's let's put it on a daily chart for bigger context. So you can see that big 36% drop. We had a bounce up to around about this level here, which is 90, let's say 95,000. Since then, it's sort of not done much. It's had a few attempts at this 95,000. It even had one, but not that long ago, back end of the US session. Bit of buying in today, no significant buying pressure at all. This looks just range bound to me. It looks like a horrible chart. Come back and have a look tomorrow, sort of chart. In terms of okay, let me show this. Cool. Okay. So in terms of ASX stocks for tomorrow, again, we can use our scan just to quicken things up a bit. So we're looking for multiple greens or multiple reds. Sunfire looks interesting. Let's have a look at Sunfire. That's bimbling around a resistance, $17. That's looking good. Worth keeping an eye on. Which is any short. Oh, I see. Looking actually pretty ordinary. Good call on the scanner. Well done, mate. You can see the breach of that key level there at 1287. Key thing here is a 200 MA, which has been tested today but failed to breach it. May get a nice bounce off this actually. So it's at one of those crossroads type points. We're testing a support, we're testing a 200 MA at the same time. To bounce or to break, that is the question. And then let's just, I'm just wondering if there's a real whiz bang one. Would I put it on? Come on, Mike. That is. Let's find one that we got. CIA Champion Iron has been looking good all week, actually. Yeah. I'm going to put Champion Iron as my chart of the day for the ASX tomorrow. Just watch this. 606 is the level that it's got stuck at. If we look longer term, you see a breach of this could see us up to around about 660 or so. So there's my ASX chart of the day. As for the US, favorite faves. This is setting up again. This is the ETF that looks at rare earths. Setting up again, ready to rock and roll. For a potential test of that high $80, 6%, which for an ETF is very good. So still liking that lots. As for Nvidia, we've seen some buying coming in through the course of the week. Until yesterday, of course, I was about pullback. This feels range bound, relatively unattractive, to be honest. So I'm not jumping up and down about that, but one that we have been jumping up and down about is Lamentum Holdings Inc. Ticker code LITE, light, and you can see this continues its trend to the its upwards trend. Call this a chart of the day, somewhere around about here, around about 200 bucks. Now at 325, it's mental. Just looks like it's a great place to be. Not a compelling candle yesterday, so have a look at that as well. More time highs on this. Don't just ignore those lines above. So, but what I've done here, you see, I've actually put lines at the same distance from the last range here. Some would suggest it's a good thing to do when you're in blue sky territory. So we've done the same there, and we've done the same there. So LIT looks great. And another one I wanted to. Wanted to have a look at. Okay. Right, I wanted to have a look at Tesla and just see what that's doing. Come on, mate. Yeah, that's Tesla. So moving back up, 450's been tested. That's a key level there. 469. Yeah, keep an eye on that. That's one I would say. This is going to be chart of the day for the US tonight. Wouldn't be doing anything until after the rate decision and the Fed chair press conference. You're probably got a half an hour in your morning if you're over in the East Coast. So just in terms of timing, if you've never got up and watched it, see if you can get up and watch it. So 6 o'clock is when the interest rate decision comes out. Then 6:30 is Jerome Powell's press conference. If you can have that and just see how the market's moving and is talking, it's a really interesting. It sort of puts some of the pieces together. So if you've never done it before and you can be up at 6:30 tomorrow, have a look at that. That could be interesting. So there you go. There's a couple of charts of the day to have a look at that maybe or maybe not key levels. Either way, that's it really for the day. So why is that? All right, so again, just to reiterate, what are the key lessons? Doing less may result in achieving more with the trading. No trade filters are a challenge to create, but more so to execute. The psychological impact of not trading can be significant, but the effort could be really worthwhile. So in light of what we talked about today, focus on what your right action should be. Hope that's been interesting, useful, giving you some things to think about. I will love and leave you. I will see trade safe tonight. Remember with the Fed there. Nothing wrong with taking some risk off the table if you feel it might be merited. And of course, we'll see how the dust has settled and be ready to go at the lunchtime session tomorrow. If you haven't got the link for that or are not part of that, we'll be talking about what happened to the Fed. We'll be talking about what that means to you going forward. Yes, you can email me about scanners. I'll put it in. There we go. No, that's not it. That was the link for the AI to business. So right, there's the link now in chat for the session tomorrow lunchtime, 12:30-ish. That'll kick off. Obviously, if you're watching YouTube, if you subscribe to the channel, just click that little bell notification thing, and you should be in a position to be notified that half an hour before it's going to go live, and then when it does go live. So however you choose to watch, thank you very much for being part of it. I hope it's given you some things to think about. And I will look forward to seeing you next week or tomorrow, depending on when you next check in. You guys take care. Enjoy the rest of your Wednesday. Thank you very much. My name is Mike Smith. We'll catch you soon. Bye for now.